I just think that we're so early in the ecosystem. What's going to happen across not just Bitcoin but the rest of DeFi? It's really hard to fathom what's going to happen in 6 months to a year. It's more about like how can we continue to race to support all that development that's out there. And so when people say like, oh, I think it'll be, which is like, hey, gold is worth this much. Okay, well, like it could, we could be, 100x, 1000x more of that in terms of like what the value of all these assets are going to be.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, I want to really lock in your focus on the mindset shift needed to survive long-term as finance transitions from account-based systems to wallet-based systems.
That we're starting to see the assets move away from the account-based to a wallet-based ecosystem.
Wealth is no longer about selling assets for fiat currency. It is about learning how to take your utility digital assets like XRP, XLM, HBAR, you name it, and learning how to lend, how to borrow, and how to earn yield directly on chain. The tools now, people need to understand that were once reserved for wealthy individuals, the top 1% of the population, are now in the hands of retail investors. And the question moving forward is going to continue to remain, will you adapt to this digital transformation or will you get left behind? So in today's video breakdown, I'm going to encourage you guys to learn. I'm going to show you guys of some examples via the mindset shift that you need to have in order to really truly make it in this digital transformation, to keep your wealth, to expand your wealth, to grow your wealth with your utility digital assets like XRP. And I'm just saying XRP because over the past 6 years, I've been constantly making Ripple and XRP related content. And so I'm just going to go outright and assume that the vast majority of my followers hold said digital asset. So that's what we're going to dive into in today's video breakdown. If you enjoy these deep dives, these videos, putting them together for you guys is such a blessing. Do me a favor, smash that thumbs up button and subscribe. So don't take it from me that now is the time to educate yourself and learn about these not only ever evolving technologies, but learning particularly about the DeFi ecosystem. Take it from people with valid credentials in the space. For example, the first person that you're going to be listening to is Sandy Kual. She is an industry leading expert from Franklin Templeton. She also holds valid and updated credentials working alongside organizations like the CFTC, the World Economic Forum, and the DTCC. So take it into consideration what these industry leading experts say to you guys on stage at recent panel events.
Advice for those who are in trad investment firms at this stage?
Learn, right? I mean, I didn't know anything. You didn't know anything. No one coming from traditional finance knew anything about this infrastructure or this ecosystem or how it operates until they started learning, right? And so learn. Right? We in financial services, I think, are the most adaptable industry I've ever seen, right? There is never a challenge that we haven't risen to in terms of being able to digest and understand the opportunity and isolate it and rebuild to capture it and rebuild our businesses around it. So I think that this is just one of those moments where you need to challenge yourself to stop being a skeptic and take a step back and understand that this is a tech-driven change. It is all happening because there are new technologies that operate in new ways. And every time we've seen that, we've seen massive changes in how firms architect themselves and deliver their products and services. And we're just on the verge of yet another iteration.
So today, the adoption level is pretty much zero, right? In traditional finance, we really don't use DeFi at all. But then this is the interesting part. In 2034, 43% respond and say this DeFi adoption is going to be much higher. So what does that mean for us today? It basically means that if you haven't already started, it's probably the right time to investigate DeFi and understand it a little bit better.
So now you have two industry leading experts on stage and on panel discussions from 2025 telling you all that now is the time to get educated. Yet you still have so many people sidelined as skeptics. You still have so many people thinking that DeFi is a scam and they're ignoring their education and they're fearful to get involved. And that is the wrong mentality. So here I said in this post, your reality is a reflection of your thoughts. If you want better health, wealth, or skills, Start by upgrading your mindset. You need to learn, you need to adapt, and you need to grow. Mastering things like DeFi, digital skills, or improving your finance is not just about information. It's about shifting the way that you think so opportunities become visible where others see nothing. And this is the number one thing that is going to separate people from becoming the new 1%, from becoming the new wealthy, from actually experiencing this wealth transformation that we're currently living through is a mindset shift. So change your mind and your future will follow. Leading me over here to this post, because we've seen a lot of tribalism lately in regards to XPR and XRP. So I said here, so many more will wake up and see that XPR is not competing to replace XRP, like all the uneducated influencers have made it out to seem, simply because the ticker symbol looks somewhat similar. Read the documents, watch panel discussions, and do the research. XRP and XPR are two completely separate crypto assets that will both play an important role in this digital economy moving forward. And the reason why I'm saying that is because you have individuals in this space that have a huge following putting out misinformation like this. This says here, I see Proton and its affiliated projects getting hype up again. Just do yourself a favor and ask Grok if any institutions are using XPR Proton. The project would have 10x the success if it just acknowledged itself as a meme coin and ran with that. And this has 121,000 impressions. Yet the crazy part is if you come over here, this is a really great post from Potons on X, and it says, holy crap, there is more XRP in Loan Protocol than XPR. Almost 6 million XRP tokens are now deposited and earning loan token. Welcome all XRP holders. This is a huge mindset shift from the normal way of thinking that most influencers in the XRP army hold. If you come over here and check yourself, think about this. Whales with much more money invested in XRP than most likely you listening in, unless you have millions of dollars invested in XRP, are over here on MetalX lending out their XRP and earning yield. And they're doing it more with XRP than they are with XPR. This is huge. This is a huge, like, mind-blowing moment where it's like, are you going to come over here and you're going to listen to influencers that don't really have any valid credentials in this space? Okay. Or are you going to come over here and actually look at the data, look at the statistics, and look at what the whales are doing? It's your choice. But again, ignorance is bliss in an era of information. Right here, you can see in terms of all deposits, there's over $17.7 million lent out on MetalX lending in XRP. Versus in XPR, there's only $8.8 million lent out. So XRP holders are lending double the amount of XRP on MetalX lending than they are in XPR network. This should open your mind, and this should get you to realize that the whales, the people who actually have money in this space, are over here utilizing the Metallicus ecosystem to earn yield on their XRP, to not have to sell their XRP, to be able to borrow against their XRP, and to be able to remain liquid in the crypto ecosystem without having to sell for fiat. This is a huge, mind-blowing aha moment if you actually take a look at the data. So that leads me over here to this post where I said, this is the future. All of your assets should be working for you. Understanding it now is going to set your future self up for success and abundance. Choose to ignore your education now because you are lazy or fearful, and you risk being left behind. DeFi is the now. DeFi is the future. DeFi is the level playing field that Donald Trump was talking about so constantly in his last term. Lending, borrowing, staking, liquid staking, running a node, running a subnet, liquidity providing, yield farming, real world asset vaults, fractional ownership, 24/7, 365, instant finality, feeless, compliant, and regulated. Put these terms at the top of your priority list, and the doors of wealth creation open up for you and your bloodline. And the reason why I posted this is because Sean Sweeney over on X stated this phenomenal thought process where he said, and I totally agree with this individual here. So shout out to you, Sean, on X for this post. He said, dude, I think there is an absolute flood of us coming. And by the way, this individual is an XRP holder who previously posted a response on Marshall Hayner's X profile talking about how he lent out his XRP to pay for an expense, which I'll get into in just 1 second, without having to sell for fiat to pay himself to pay for that expense. So coming down here to the bottom half of his post to save time for the length of this video breakdown, it says here, that's what's about to happen with metal. It's what happened to me. If you would have told my old self before metal that I would have all my XRP on a different network, earning yield and serving as collateral, I would have told you, get lost. But yet here I am, and I feel legit free for the first time ever financially. I can't begin to tell you how nice that is. Well, anyone reading this is also a crypto lunatic that understands utility crypto. So you know how hard I have been grinding. I even recorded a little soundbite to myself on July 20th, basically saying, holy crap, I feel like I can breathe and have real clarity that I'm all right. Never have to worry about buying groceries for my family. Once others finally get over their old mentality and try this, the flood ensues. Very unsolicited rant, carry on smartly. And what particularly is he talking about? Well, if we come over here to a Marshall Hayner post where he goes on to talk about lending and borrowing and being able to earn yield on your digital assets, Sean Sweeney under here said, legitimately mind blown by this ecosystem, talking about the Metallicus ecosystem. Great to know, thank you. 100% real use case from today. My wife is doing a home birth and I needed $7,000 to pay our balance as she's due any day now. I legitimately just borrowed against my XRP, my XMT, and my XPR that I have deposited as collateral. Transferred to my bank account, ready to roll. No crypto sold. You guys see that right there? I will then pay that loan off with my daily income from the farming pools and lending rewards to get his XPR, his XRP, and his XMT back after he pays off the loans. Freedom tastes sweet. This is a huge mindset shift, and this is exactly what is available to us as retail investors now, which is what we've been trying to get people to see in the Wealth 28 Club. This individual just leveled up. How? Because he's not stuck back in the traditional financial system in fiat currency. And instead, he lent out his utility digital assets because he now has the ability to do so on a compliant platform. And now, eventually, later on down the road, once he pays his loan back, he can get back his utility digital assets. And you guys have seen me talk about this strategy before. For example, down here, GhostWeb3 on X said, after we get rich, don't get the Lambo to flex on family and friends. Get the Lambo as a constant reminder of how far you've come and as a token of your success. Now, it doesn't matter if it's a Lambo that you want after the next bull market cycle, or if it's a house, or if it's you want to pay off your debt, or whatever it is that you want to do with stable coins or fiat currency. Get into this mindset and this way of thinking that your current utility digital assets can be utilized as collateral to then go and use that collateral after you've lent it out, borrowed against it, to go and get the things in life that you want without having to sell out of your original crypto position. So I said here in response to that, get the Lambo. But again, keep this in mind that it could be in response to get a house, get a Lambo, pay off your debt, whatever it is. Okay. Don't sell the crypto, in this case, XRP, for the Lambo. Instead, consider this strategy. And this is a strategy that we constantly talk about in the Wealth 28 Club. Use the XRP to buy the Lambo and still keep the XRP. Here's an idea how. You become an XRP millionaire, and instead of selling, you liquid stake your XRP for passive yield. Then you lend that staked XRP for even more yield. You borrow against your liquid staked XRP in stablecoins. You buy the Lambo with the borrowed stablecoins. Take it even a step further. You tokenize the Lambo on a real-world asset yield-generating platform, and you list it for occasional physical rentals under an LLC structure. Then, tokenization yield and rental income repays the loan, Meanwhile, the entire time your XRP earns yield and appreciates in value. Years later, you've still got the XRP, you've still got the Lambo, and you've built a cash flow business, and you never had to sell your future for fiat currency. Most won't understand this. They will sell in the bull run, they will flex, they will spend, they will think that they're going to be able to enter in some dramatic pullback or bear market cycle, and they will go broke. Instead, play the long game, earn, borrow, own, and multiply. CYPRX Wealth 28 Club is different. And this is exactly what we're talking about. And we've shared video breakdowns in thorough detail on these strategies in previous videos. Take a second here and listen. That process looks so much less appealing than this process here, where you're literally staying liquid, you're staying in the crypto ecosystem, you're maintaining your original XRP position, which you worked your ass off to accumulate, and you're earning yield on it, and you're earning yield on the house that you bought with your XRP.
Key takeaways. Number one, DeFi in one form or the other is here to stay. Might change, might look different. There might be financial institutions involved because there is a place for them, but it's definitely here to stay. It's not going to go away.
And if we come over here to a recent panel discussion, since we're on the topic of lending out your digital assets, borrowing against them to then go out and purchase said Lamborghini or said real estate property or pay off your debt or whatever the case may be, well, this is a panel discussion from only 1 month ago, has 139 views, and has industry-leading experts on stage with valid credentials talking about the same exact thing that we're discussing about here in the Wealth 28 Club, which just goes to show the alignment of our mindsets here in this space compared to other retail investors that are still stuck in the outdated mindset that they're going to remain wealthy and in abundance beyond 2030 by selling for fiat currency. So take a second here and listen to this industry-leading expert on stage say that it's actually much more beneficial to stay in the digital asset ecosystem, lend out your digital assets, borrow against them, and purchase real estate instead of doing it through a bank.
Right. Why? Because you can express in the smart contract fairly simply, you know, it's SOFR plus 600 or whatever. There's a market clearing rate. You might be able to get lower cost of capital on chain, actually. Like you remember, Stunny, there was a time right after like the FTX collapse, like rates in DeFi, borrowing on Aave is actually cheaper than borrowing from your bank. And I think the integrations with the real world, like if you want to go buy a house or do other stuff, you know, it's actually quite useful, right?
Now, in this particular case, he's talking about lending and borrowing on Aave, but same scenario applies for the MetalX lending platform. It's cheaper, it's more effective, it's more efficient than going out and borrowing money from a bank right now. And you have the power to do that in the palm of your hands through a internet connection and a mobile device. Again, not financial advice, but just like the individuals at the beginning of today's video breakdown said to you all, you should be learning about this. If you do not know how to do this list of things that I mentioned in this particular post, now is the time to study. Now is the time to test these things out with small micro amounts so that you can get effective and efficient at seeing a return, a percentage return on small amounts of money. So that way, when you have larger amounts of money, you know strategies that work and that you can commit to and that you can understand and implement in your life. So that way you can expand and grow your wealth. I cannot stress enough, ladies and gentlemen, now is not the time to ignore your education. Moving on, I said here, more people will slowly realize that you don't need a bull market cycle to make money in crypto. If you learn the right strategies, practice proper risk management, and surround yourself with the right community, you can create opportunities in this market in any cycle, up or down. And that is the second mindset shift in today's video breakdown that I want you guys to focus your attention on. Is so many influencers make it out to be like you have to have or go through some bull market cycle to make money in crypto. That is the farthest thing from the truth. And if you believe that, then again, you're focusing on people who are just trying to make entertaining content for you to spike your dopamine and get you to hope for some high-end XRP price. When in reality, if you come over here to MetalX lending, you can see right now that there's over $17 million right now earning 0.72% APY, and individuals borrowing against that are earning an additional 11% APY. This just goes to show that regardless whether XRP is $100, is $1,000, is 50 cents, you can make money with it. You can pay yourself passive income. You do not need the market to go up or down in order to make money in crypto, which is again why I'm creating this video breakdown for you guys, so that way you can start to learn these strategies to stop thinking that you need market cycles in order to make money from these markets. It takes a mindset shift, and it does take learning a strategy, but that's why we built the CYPRX Wealth 28 Club, to test these strategies for you guys live, record the content, so that way you can learn without having to risk your digital assets. Moving on here, just to show you guys that we're talking about key vocabulary words that some of the largest organizations in the game are currently talking about. If we go back to a post that I said here, particularly focusing on the Metallicus ecosystem, Metal, Loan, and XPR, giving you guys an insight and an example into my flywheel strategy to earn yield in the now, I said here, I staked half my XPR to start my flywheel, and well, it's flying. We don't discourage people who start off with small amounts. We show them how earning something is better than earning nothing at all, even if it's a penny on a position. The compounding flywheel will turn into hundreds, hundreds will turn into thousands, and thousands will eventually turn into millions. This is not a get-rich-quick strategy. It's diversifying some bags to test out long-term DeFi strategies. This is the I'm here for 2030 and beyond strategy. And I gave a full screenshot breakdown of my current flywheel in the DeFi space inside the Metallicus ecosystem. Now, I highlighted the terminology here, flywheel. Why did I do that? Well, if we come over here to a document, scroll up to the top of this document so that way you guys can see some of the largest names in the game are on this document. You have Deloitte, which is one of the major top 4 consulting firms in the industry. You also have Zodia Custody, who is backed by financial institutions like Standard Chartered and many more like Northern Trust. So huge industry-leading experts in this space. 2025, building the foundation of trust, evolving the role of custody and tokenization of real-world assets. Well, in this document right down here, it literally uses the same exact vocabulary that we use here in the Wealth 28 Club. I highlighted here where it says the flywheel effect, stablecoins and tokenized money market funds. Critically, tokenized money market funds can now use Circle's USDC or other stablecoins for subscription, redemption, and earning yield. This usage embeds stablecoins deeper into institutional workflows and reinforces their legitimacy as on-chain settlement tools. In turn, the availability of stablecoins enables new yield-bearing instruments and more composable financial infrastructure, creating a positive feedback loop. So not only have I posted my flywheel strategy for you guys, signaling again that key vocabulary word here from these financial institutions mentioning the same exact vocab, flywheel effect, but here it says that they're participating in these feedback loops. Well, where have we heard that before? If we come over here, this is a post that I put out to you guys back on July 30th in response to a Coach JV post where he talks about selling $300,000 worth of profit in this next bull market cycle for fiat currency to participate in some life insurance strategy. I said here, instead of selling for fiat currency, you can take your stable coins, you can sell for $300,000, but instead of putting it into fiat, turn it into stable coins, lend out those stable coins, and then borrow against that $300,000 and participate in the same strategy, but keeping your original $300,000 position in stable coins that you lent out. And right down here, I mentioned that you can do that on the loan protocol. Now, I talked here about looping strategies and how they're real and how financial institutions are already learning about this. Don't take that from me. Take it from Apollo, who has over $500 billion in AUM, where Christine Moy on stage on a recent panel discussion talks about how she's learning looping strategies.
You know, especially in like the crypto native set, like not only do you want to invest and have yield, you want to interact with your investments. You want to, you know, I guess I've been learning about looping and vaulting and like swapping, right? Like you want to get active. And so from my perspective, like
not only on stage did she confirm that she's learning looping strategies, but she also talked about how all of this is possible right now in the moment.
thanks. I'm like really excited to talk about this. Like I think for those of you that have known me through the decade, it's been my life's work to try to figure out how do we tokenize real world assets and utilize the blockchain to build better products and services and experiences than we have today. So like just a quick example, like when I get paid by Apollo into my bank account, you know, like I kind of guesstimate, like maybe this is how much my credit card bill is. maybe this is how much I have left. I should do something with that. And then if I actually got it together to do something, which I don't because I'm a hot mess and I'm working too much, like maybe I would like press a bunch of buttons and like get them into treasuries just to get like a base level yield. Or, you know, if I was really ambitious, I'd start investing in some Apollo products, but we never get there. Now, and then inevitably, if I end up doing anything, then I have to reverse out of it because I got to pay taxes the next month. So then I have to like, you know, press all those buttons and call a private banker or whatever it is that I need to do to get back into cash. And then literally like, you know, all of my earnings just not utilized, not invested, not yielding or anything. Now in a future world where we have multiple assets on chain, and by the way, the future is here, you know, I get paid from Apollo and I get paid into my crypto wallet. And my crypto wallet has designed for me a model portfolio that is 10% stables, 20% money markets, 25%, you know, Apollo private credit, of course, and 25% like YOLO crypto native yields because I'm risk tolerant like that. And so basically I get paid and automatically that pie chart, like my payment or whatever my payroll is, gets automatically distributed into that pie chart. And without me having to do anything, every cent of my earnings is being deployed, invested, and yielding. Take that a step further, I go to lunch at Nobu, and I'm like, okay, cool, like I'm gonna pay for lunch now $100 to Nobu. That would be an automated, you know, DeFi swap from treasuries into USDC, off-ramped to pay to Nobu. And not only is every penny yielding, it's yielding up until the last second for which I have to spend it. And now that is absolutely a 10x experience than what we have today. I mean, unless all of you all are like managing your earnings better than I am. Anybody here doing that? Okay. So like assuming that you're not, by the way, applicable not only for people, applicable for corporate treasuries, applicable for DAOs, and by the everything that I've described exists today. So, you know, that's like a multi-step forward, but you know, in terms, and I can't do that alone. And that's
everything that she just described, as she mentioned, is available today. Now, depending on what ecosystem you choose to do it on, for this sake of today's video breakdown, I'm particularly talking about the Metallicus ecosystem, where I said here in this post, the entire ecosystem right now earns you passive income. That's what I don't think people understand. Directly in a wallet built for both institutional and retail investors. A simple and easy user interface compliant with AML and KYC, where you can trade, lend, borrow, stake, yield farm, liquidity provide. We are moving from an account-based system to a wallet-based system. And here I screenshotted a little tiny picture from the Metallicus Q2 report that came out at the beginning of August, where they talked about here they're integrating full metal blockchain wallet functionality into the WebAuth wallet. This update will consolidate staking, governance, and transaction tools into a unified interface, streamline workflows, and enhance usability for both institutional and individual users. Now, this falls in line, this post where I mentioned we're going to go from an account-based system to a wallet-based system was something that Sandy from Franklin Templeton mentioned in a recent panel discussion.
Right? Underlying it all is a really foundational change that people need to wrap their minds around. And that is, for the last 50 years, we have been having an account-driven system. So you and I, we probably have a checking account, a savings account, a brokerage account, a retirement account, maybe an investing account around that. We have lots of different accounts. We're moving away from the account-based world to a wallet-based world, where we're going to have one wallet. That wallet is going to be able to contain all of our assets. It's going to contain the digital forms of money that we spend. It's going to contain the digital investments that we hold. It's going to hold our digital identity document. It's going to hold digital copies of the titles to the insurance policies and assets we own, right? It's going to really be the foundational piece of financial architecture for our lives. And all those things you mentioned, right? The stable coins are putting the cash into the new wallet-based ecosystem. Tokenized money market funds are putting the savings accounts into the wallet-based system. Now we're seeing tokenized stocks and bonds putting the investments into the wallet-based system. So this is what I mean by the migration. These feel like a lot of different things happening at once, but if you look at the underlying theme that ties them together, it's that we're starting to see the assets move away from the account-based to a wallet-based ecosystem.
So to wrap this all up, the number one thing that I ask you guys to take away from today's video breakdown is to further your education, to understand that we are entering into an era of continuous finance where earning yield on every single asset that you have will become the new normal. Don't fade your education on DeFi and lock in. Start to learn these strategies. Start to develop yourself as a mature investor, an enlightened investor that wants to expand their wealth and not just sell all of their digital assets in the future for fiat currency, hoping and praying for some pullback that may never come, that you're speculating on will happen because you think that the market cycles will repeat the market cycles that have happened in the past 16 years when the markets were primarily driven by retail investors. Now, moving forward, we know for a fact institutions are onboarding into the space. We know that they're coming at a very rapid pace. And so it is illogical to think that the market cycles are going to move and behave the same as they previously did. You do not want to get left behind, not only in terms of your education, but the financial expansion that your portfolio could experience between now and 2030 or maybe 2030 and beyond, if you did participate in DeFi. As always, many blessings to you guys. Again, I'm not telling you guys to go out there and risk your hard-earned digital assets on any of these protocols in lending and borrowing and liquidity providing by any means. But what I am asking that you guys do is you take an educational approach. You tap into a like-minded community like ours here at CYPRX that can enlighten you guys on how to do these things, how to participate in these protocols, how to participate in yield generation by watching us do it, by watching us risk our hard-earned assets so that you guys can learn. The bottom line is you got to get educated and you got to expand your mentality and your way of thinking and cut out this tribalism, thinking that digital assets like XPR are going to try to replace XRP and all that garbage nonsense that has existed in this space that has kept so many people ignorant and sidelined because they're ignoring their education. As always, be cognizant, be aware out there. Many blessings to you guys, and I'll see you all in the next video breakdown.